Now it's time for us to welcome our moderator for this session. So please, let's have a huge round of applause for Mr. Gautam Ganjawala, Senior Partner, AZB and Partners. Very, very warm welcome to you, sir. I would like to invite our elite set of speakers. Please help me in welcoming Mr. Kiran Shetty, Chief Executive Officer and Regional Head, Swift India, Swift. So very warm welcome to you. Please help me in welcoming Mr. Angaj Bhandari, Senior Vice President, Europe, Middle East and Africa, Fime. Let's have a huge round of applause, please. Very warm welcome, sir. We have you with us, and I would like to welcome on stage Ms. Karen Miller, Head of Strategy and Special Projects, Women's World Banking. Ma'am, very warm welcome. Please help me in welcoming Ms. Paroma Chatterjee, CEO, Revolut India. Very warm welcome, ma'am. And please help me in welcoming Mr. Dewang Neralla, Founder and CEO, HiWiPay. Let's have a big round of applause for everybody, our wonderful, esteemed panel set that we have here with us. Very warm welcome. Thank you.
Good afternoon, everybody, and thank you for joining us. I think as a panel, we are very conscious that this is right after lunch, and we'll try not to put you to sleep. I think, in short, I want to make long introductory remarks, but as you would have heard everybody banging on about the Indian rails and the interconnectedness of the Indian financial system is to a large degree fairly sophisticated and I would say in good hands. I think one thing that still could use some work and is a work in progress is how do you create global synergies. The world is becoming increasingly global, but still connecting financial ecosystems of different countries is still something that, just given the enormity of the task, is something that is, I would say, still a work in progress. So with that, let me turn to Paroma first. So just to ask you this question, in the era of the global citizen, in the time when this need is most felt, why is transporting money from one part of the world to another part so difficult? And why is it perceived as time-consuming, expensive, complex? And what are the categories of people that really need this to become better?
Good afternoon, everybody. First of all, it's amazing to see a fairly packed hall after lunch, so thank you all for being here. And the question that you started off with, Gautam, it's been a hot topic across the world ever since G20 identified a roadmap for making cross-border payments easier way back in October 2021. Why is that such a hot topic to even merit a G20 roadmap? And coming to the last part of what you said, is because in today's globally interconnected world, there are key segments that are emerging of people who are crossing borders for various needs, and therefore the need for money to also flow with those use cases, both outside and inside country borders. If I were to get into details on that for a bit, there are four major segments that we're seeing emerging from our experience across the world. And this is across life stages of various individuals. Firstly, it starts with studies. An increasing number of parents are sending their kids abroad to study in today's globalized world. If I were to give you some data points, last year in 2023 alone, 750,000 kids from India went abroad to study. That's not a small number by any stretch of the imagination, but if you think that that's kind of where it's peaked, it's growing at 60% growth rate and pegged to be 2 million kids going abroad from India to study in 2025. Now, what is linked to that? If so many kids are going abroad to study, parents have to send their fees abroad, parents have to send across money for their boarding, lodging, their expenses while they're there. And while they try to do that, there's the three-pronged problem statement that remains, which I term CAT, which is convenience, affordability, and time. Today, if you have to send money abroad for a use case like studies, you have to do a lot of paperwork, which includes proof of educational institute, etc., physically, which makes it a cumbersome process. Second, and this is the one that pinches most people, and those of you in the audience who experience this, I can see some heads nodding over there, you realize that the sum is a sizable amount that you're sending, and you have to pay about 4 to 5% of that just in charges to send that money abroad for something as basic as education. And time, again, is a concern, and you are holding your heart in your mouth to make sure that the money reaches in time before they log the admissions and things like that. So that's the first use case that we're seeing and the problems linked to that use case. Now coming to the second, these same set of kids, when they graduate, they start working in the countries that they graduated in. That's the typical phenomenon that we're seeing. And they are joined by another huge flux of people who complete their studies in India and then go abroad to work, and the entire blue-collar migrant worker population that goes overseas for better opportunities. Again, talking about data, I just spoke about the 750,000 kids who went to study abroad last year. Against that, there are 13 million Indians who went abroad to start working last year alone. That's the kind of numbers of people that go out there. Now, what is the need that is faced over there? Almost all of them need to send money back home to their families and parents, and a lot of it to tier 3, tier 4 middle India cities and towns over here. Again, the same 3 cat problem remains. It's inconvenient to establish credentials of the sender, particularly of the migrant laborers on both sides of the border. Their families here as well as themselves overseas. Affordability. Again, for hard-earned money being sent back, the kind of charges that get deducted, and they don't even know how much money is eventually going to get credited to their families back home. And lastly, God forbid, the need for money is for some kind of a medical emergency or otherwise. There is no way to ensure that the money reaches back on time. So that's the challenge that remains in that huge segment of workers that are going abroad seeking employment. Coming to the third segment, from that emergency, taking on from there, the third segment that we see emerging is medical and healthcare. In today's day and age, once again, access to medical and healthcare has become easier across the border. There are a lot of Indians who are going abroad for specialized treatment, and a lot of international patients who are coming into India to get affordable healthcare. Again, the same need of being able to send money easily with documentation made easier, made affordable and timely. And in a case like a medical emergency or healthcare, the timeliness resonates even more because oftentimes it's a matter of life and death. And this medical sector itself last year was worth $9 billion. Now, yes, it may seem smaller compared to the $125 billion of inward remittances that we received, where the first earlier problem statement remains, which we need to debunk. By the way, we're world's largest recipient of inward remittances at $125 billion in 1 year, where the second country, Mexico, is at $67 billion. So that's how large the whole opportunity of the amount of money going across borders is. And if you thought that that's all, and the last but not the least, I want to talk about the biggest use case that we're seeing, which is travel. Now, if there are 750,000 Indians going for education, there were 13 million Indians going for work, there were 20 million Indians who went abroad to travel last year. And there again, leaving aside the cat problem of convenience, affordability, and time, when an Indian does travel abroad, to when they swipe a card or make a payment, the amount of charges they don't even realize often is huge. Just to illustrate that point again, the trends that are going this year, just first half of this year, the amount that Indians have spent on traveling abroad, this year alone is going to be $42 billion worth of spends that Indians are going to make on travel expenses. And the interesting bit on that is close to 50% of that $42 billion is in forex currency conversion charges alone. So those are the spaces that really need to be disrupted. And this is one of the things that we're really proud of at Revolut, that we're probably one of the few companies that has actually managed to make sending money across the 38 countries that we operate in instantaneous and affordable for our 45 million users, and the ability to pay like a local when the same customers of ours travel anywhere in the world. So what I'm trying to showcase here is, while these use cases are here, they're growing, they're huge, the problem statements are there are companies like us which have managed to do it, which means that it can be done. It just requires a lot more companies to continue pushing the boundaries on this, and various governments and regulators to join hands with us to make this even more seamless.
Thanks, Paroma. Very interesting. Just turning to Dewang, because one of the use cases that Paroma mentioned is something I know that's close to your art and what you're building. So, any success stories, or innovation you can share in the student use case that she brought up?
Okay, I think thanks Paroma for mentioning two things. One, basically the number of students, because it's 750K official government data and CAT, because that's something we ascribe to. Of course, I like the word CAT because we are saying simplifying payments, we say simplifying, speeding up payments and making it affordable. We say SSA, but I like the acronym CAT. So that's something we'll borrow from Paroma and take it over. Of course, copyrighted, we can have an agreement on that. But thank you. But aside from that, let's look at the persona of a student who is going abroad, right? So that's what will set up the context in terms of what we're trying to, what we're building up at HiWiPay right now. Classically in a large city like Bombay, Delhi or anywhere else, most of the students, most of the people are kind of overbanked. If you look at the kind of strata of society which is going abroad for further studies, like for example from upper middle class to maybe a rich class, they have their own relationship managers. Their control over the rates is very, very high. They're able to do transaction and they don't really need any kind of a platform to be able to do any kind of a transaction. The moment you move down south, maybe just upwards of Bombay and move down to maybe even cities like Ahmedabad, Baroda, Surat, or even in south, like places like Hyderabad. I'm not even talking about smaller cities, but I'm just talking about Hyderabad, and smaller is much worse because when you look at Vijayawada or Visakhapatnam, they are much worse out there. Where there is a large gap in information with the students, they do not know what needs to be done. Number one. So they're confused a lot, bankers confuse them, their bank managers confuse them, and again, at the end of it, they're ripped off from the commercial side. What I think the next generation, and that's what we're building right now, is a complete end-to-end digital journeys for the student. Because for a student to be able to do any transaction DIY, because again, the essence we're talking about is a large fee payment. Today, for example, even if you're going down to make a fee payment of average university, it costs about $20,000 to $25,000. That's a bare minimum. Larger universities is about $70K. So we're talking about minimum amount of about 20 lakhs, going upwards to maybe about 70, 80 lakhs. Whether it's finance to loan or whether it's doing remittance, that's a larger amount. And there two things come in place. One is the trust. Second is the speed in doing the transaction, the ease of doing the transaction. Because students don't want, or anybody, forget for that matter, student or anybody else, nobody wants to get that transaction wrong. And that's where the simplification of the journey comes in. That's where we step in and build up a complete digital journey, right from carrying in the admission documents to the KYCs, to basically going on to basically adding the beneficiaries. We already have a list of beneficiaries with us in terms of universities. So that makes the journey easier and digitally signing up the A2 forms. And along working with all the 81 and 82 partners behind the scene out there. And including, if the KYC, it effectively means whatever KYC norms are prescribed by the regulator, we follow that. There are issues in terms of KYC right now. That's another thing we need to flag off subsequently. Let's say we talk about video KYC and things, a lot of improvements are required. But having said that, the whole journey is digital and that's what we are working on. There are few companies who are working on that space right now. Few banks are working on that space. I'm sure Revolut also is working in that space quite a lot. But we've seen very few banks working in that space. Leave out the top maybe 3 or 4 banks in the country. We've not seen any other bank working on an end-to-end digital journey for the students. And it's a guided journey. In addition to that, what we have built up out there is basically we created even a journey on WhatsApp. We're calling about, because WhatsApp is the most preferred channel and that's where basically you can create a guided experience for, and that's, I think, not only us, but when you see the entire industry segments, people are going to evolve towards ensuring that students are guided, their parents are guided in terms of when they're doing the transactions, versus basically trying to just fill up a form and do a transaction. But that's where we enter in, and again, for us, when we look at India right now, largely for anybody, the problem to be solved is on tier 2 and tier 3, and that's where I think, again, I'm going back to my original thing. There's a huge information gap that it can only be solved digitally, and that's where the journey is being set up right now.
Thank you. And now just turning to the macro and asking Kiran, clearly we have a problem to be solved, and the faster to market strategy very often is to leverage off what we already built instead of reinventing the wheel. So can you speak to how even using the existing plumbing, this simple problem statement can be solved, and what is the innovation that we are seeing in the space?
Thank you, Gautam, and very warm good afternoon to all of you. It's a real privilege to be here and speaking to all of you. So from our perspective, when you look at Swift as a company, every third day value of world GDP flows through our network, right? And that happens for a reason. And that reason is that we follow an open standard. Everything that flows on our platform is standardized. We use ISO as a language, which is not our standard, it's the open standard, right? I look at it in the analogy of an airport, right? We have created airports in every country for moving digital data, right? And there's a standard to it. Now, when you're creating a new payment mechanism, say UPI or any other, you don't have to rebuild the airport, right? Because that is available. You ride on top of it and accelerate the agenda of innovation. So I believe in what we have seen, standardization is a very, very important proposition in this entire thing. So we should look at evolution of standards in a consistent manner and use existing channels, also in light of the fact that the G20 nations want to bring down the speed, bring down the cost and accelerate the speed and reduce friction, right? And we have been able to prove through our engine that payments can be credited within an hour. So 90% of our payment today happen in less than an hour, right? And I spoke about every third day we carry world GDP. So that's the kind of evolution that has happened, and infrastructure is available to interconnect. So that's what I would add to this thought from my perspective.
Thanks, Kiran. Just switching gears a bit, all the panelists talked about data points, and how even in the India story, people talk about data points, this many number of payments, this is the financial inclusion we've received. Just turning to Karen, I think one of the things we talked about, which was quite telling, is the fact that today that data point doesn't give you disaggregated data for women. And therefore, when you are trying to measure the impact any of these financial inclusion measures have had specifically for women, it becomes difficult because there's not even the data set available. So I wanted to ask you a more broader question. In the context of financial inclusion, given that you have experience across several countries, how can regulation change the game and, is it disaggregation of data? Is it incentivizing products being built for women? Share your thoughts on that, please.
Thanks so much. When you think about the regulator and in particular driving women's financial inclusion, they have an essential role to play, but I don't want to put it all on them. But clearly there are a few things that they need to do to make this system work for everyone. First of all, when you're dealing with financial inclusion, is your national financial inclusion strategy includes specific targets for women? What is the growth that you are expecting there? So having very specific goals in your national financial inclusion strategy. The next thing is, with every policy and regulation, you have to be stopping to ask the question, what does this mean for women? And more specifically, what does this mean for and underserved women in your market? If you're not asking that question, your policy could inadvertently be putting women further behind, and we see that quite often. But most importantly, that component of gender disaggregated data. It is essential for understanding impact. It's essential for making business decisions. And so the regulator can play that role in mandating that. It's not easy. It is, difficult to do, but it is essential for us to build a stronger, more prosperous future. I will say, if there's anything that you take away from today's session, is be like Chile. And for any of you who are familiar with Chile's journey, they were doing gender disaggregated data far before anyone was ever talking about it. and it's been probably over 2 decades now that it has been imbued throughout the entire market, all government entities, the private sector, etc. And you can see the progress that they have made by doing that investment. But once again, it's not all on the regulators. So, if I pose a question out to this audience, how many of you gender disaggregate your data in your organizations? Okay, it doesn't look like anyone. So right there, we've got an action item for all of you to go back to your organizations and say, what kind of data are we tracking? How do we start tracking it disaggregated by gender? And I want you to focus both on your external, your customers, but also internal, making sure that you're looking at women staff at all levels of your organization, looking at attrition and retention rates. And so for the fintechs and other financial service providers in the room, that's your homework assignment. For the investors in the room, pressure on your investee companies, gender disaggregated data, having KPIs tied to management. Absolutely go ahead and do that as well. And for those that aren't in the fintech or regulator or investor categories, in any conversations you're at, when you're talking about customers, when you're talking about regulation, ask the question, what does this mean for un- and underserved women?
Thanks, Kiran. Just moving to Angaj, and to pick up of what Kiran said about the commonality of standards. So, how important is it to standardize things? Because ultimately, a financial ecosystem of different countries, if it has to talk to each other, it needs to speak, to be simplistic, the same language. So, to make interoperability, which is a buzzword in India, but to make interoperability across countries, how important is this, standardizing?
Thanks Gautam, and warm welcome to all of you. Honored to be here. I think very interesting points, and I'll try and give my perspective here that, like Kiran mentioned, the standardization is key, and it looks flawless when there are use cases, when we are using a payment method or any other technology. It looks flawless, but there is a lot of work behind this. To give you a simple example, apart from SWIFT, today, if any one of you is able to use your payment instrument like a card anywhere across the globe, it is because there are globally defined standards. So EMV is one standard, which is all across for your card payment technology or for the, let's say, e-commerce technology, and we all are able to use a card in the wallet to be able to use it anywhere in the world without any hassle. Now, to make these the technologies interconnected, of course, there are regulatory framework, and then there are the regulators have to come together to create basically a common standards and specify those common standards so that the technologies or the use cases can be used globally all across. As an organization, our role is to ensure that these standards are defined and then the standards are complied to, and then there are compliance, testing and certification framework around it to make sure that we are mitigating all the risks of your fraud, your data theft, or the functionality or the usability of these use cases. So I would again re-emphasize that the compliance is not should not be seen as a mandatory action, but compliance should be seen as part of the product life cycle to mitigate the risks and have a homogeneous experience around the products. And this is something which can move across countries and give a seamless experience to users, crossing the borders.
Thanks, Angaj. So from everything everybody said, I think the financial ecosystem, whether it's in India and especially cross-border, works on the basis of partnership. And I think, Dewang, I would like to get your views, just given the work you do. How do you pick the right partner? Because interconnectedness also leads to interdependence, and uh, one weakest link in the chain could let you down.
I agree with that, Gautam. I think finding it's like basically getting into a marriage, right? For example, so you get into marriage. Of course, you don't think about divorce for day one, but of course, you get into marriage. You find out the right set of people around there, but it's predominantly driven by the need of your customer. I think you would need to keep, for example, when we work with students, there are a couple of things we keep in mind. What would a student require when they go abroad? Number one, for example, do they need any global bank account? Maybe partners out there. Do they need global partners? For example, we could partner with someone like a Revolut out there in global geographies to help students like UK and the geographies they're operating in to give maybe their account access to maybe including other services. For example, we've partnered with people like Empower or Prodigy, which are your loan providers and all. So, idea is to find out what is the need that is satisfying for your customer. Number one, paramount. And second is basically how easy or how simplified you can make the journey for the student, or maybe any kind of a segment that you're serving, you're going to help. Ultimately, you need to be able to look at that. And it's always a customer first approach. It's not anything else. And then you keep on innovating when, as the world opens up, you'll have more and more partners. For example, the next step to a lot of these things could be maybe working with, tying with local brands in those countries, looking at maybe an affiliate marketing partners, to a whole lot of other things that you could identify and work with. So again, as I come back, keep the customer first, identify who are the best suited, and I would look at most compliant players in that geography, because at the end of it, let's face it, assuming that there is a certain amount of compliance requirements for a player in any foreign geography, if there is any loose link in the compliance, that could virtually take down your business. It impacts the entire value chain. It's not only affecting basically your business, because the moment you start thinking about, okay, fine, it's not going to impact us, but it does impact everybody. Third, of course, for example, we've seen you need to keep your ears and eyes open when you're working with partners. Also, we've seen what's happened with Synapse in US, for example. So a large BaaS provider just folds up. Silicon Valley Bank had done that earlier for. So we've seen bank folding up, we've seen BaaS providers folding up. So you need to ensure, because at the heart of it, what you're playing with is money. And with money comes trust. And I think that's where I think you can't let your customers down at any point. So you tread with caution, but of course identify the right partners based on your customer needs.
When lawyers speak, I would say your answer was diligence and get a prenup.
Absolutely.
Just moving on to, back to Angaj, and you already touched upon it briefly, but one is the partner going down. The other is nobody's at fault, but the solution was susceptible to data leaks, to fraud, and we've seen that even in the Indian ecosystem with Aadhaar Pay, etc., where there were some bad actors. So, especially when you stress test solutions, how do you plug those loopholes after thinking from the perspective of a third-party attack?
So yeah, again, interesting question, Gautam. And so I would say that there are the testing certification framework, which is on the functional side, which are on the security side. They are ever evolving with respect to the technology which are evolving. With every solution which are being launched, and our role comes, and again I would like to emphasize here that a lot of times we see that the solutions being launched, the compliance is discouraged. I mean, it is seen as okay, it is mandatory, and do we need to do a tick mark here? So technology can really evolve fast. I mean, there's no limit there. But what I would urge that with the improvement on technology, the compliance testing, all of these have to be embedded as a part of the life cycle here. Now, the methods of testing certification is evolving. I mean, there are no defined method that, okay, you have to test or you have to comply in this way. Our role is that when we get into this product life cycle, in the early stage, based on the specification, we define the framework for testing. And it has to go through as the product develops, and then make it industry standard, to make it homogeneous for the industry. So I would say that it has to be embedded in the product life cycle to make it more robust and fraud-proof. And it is ever evolving. To give an example that Fime started 30 years back purely on the EMV technology, but today we are doing testing and certification around biometric authentication. Because, and to give you a use case that there are, when you do a face scan on your phone, we see in our labs that at times with the cosmetic face created, you can open the phone with that created. So that's where we are testing against it. So it is a continuous evolution on the testing space as well.
Thank you. Paroma, just going back to you, and we started with the problem statement and you talked briefly about the innovation. One thing that especially global fintechs require as they start operations in multiple countries and across borders as a use case, various different countries will have their own licensing regulations. And the world knows how difficult sometimes getting a license is, both in terms of delays and level of diligence. Do you think, if you're looking blue sky, there could be some sort where there are credible global players, some sort of an inter-regulator protocol where you can get, if not quicken, if not make it automatic, at least quicken the pace of licenses as you add geography?
Brilliant question, actually, Gautam. It's the inter-regulatory protocol is something that I think the world needs to gradually move towards converging on. And it's not just around one single area. I'll quote Angaj to go and say it has to be embedded across the customer journey. Just to take forward the analogy that Kiran gave of SWIFT being the default processing rails, that is kind of like the airport. But today, if you have to send money abroad, it's more like somebody traveling from a village in one country to another village somewhere else. They have to walk to the nearest bus stand. They have to take an overnight bus to the nearest airport, then take a flight, then have a layover somewhere with a connectivity onto another airline, then go to another country, then get off, then take another bus to another village, and then walk to their destination. That's how cumbersome actually sending money abroad is. So while one leg can be optimized, which is what I think Swift and Kiran and Tina have done a great job in the flight being made into a 1-hour flight, but the entire journey for an individual still takes that long and has to pay everybody across the leg. So it is important when you look at, therefore, interregulatory protocols across various sides of the border to have it cut across the entire customer journey and embedded into the core journey. As an example, today, and what does the customer journey mean? It starts with first customer onboarding. What is the reality today? When you apply for a financial product in one particular country, you have to be checked and verified for KYC, AML, sanctions, regulations in that particular country. And then you avail of a financial product. If you go to another country and want to avail of a financial product there, you're treated as a completely new customer with no history whatsoever, and the entire chain of KYC, AML, sanctions checks has to be done all over again based on someone else's regulation. That's the reality today, which is really cumbersome for a global citizen who wishes to be able to transact seamlessly across borders. Now, what we do at Revolut, as an example, is when we're onboarding a customer in any country, we have a proprietary financial crime solution where we check for every individual. Even if you're in India, we check for KYC, AML norms that actually are pertinent across the entire world. Okay, we check for sanctions lists of India, UN, OFAC, etc., etc. Which means that if a customer has gone through the verification and is onboarded in India, they will 100% be able to clear the KYC and AML checks somewhere else and be able to get onboarded. But the thing that is needed, while we can create that entire solution and build it into our product architecture, what is needed is for governments and regulators to realize that and give credence to that. Just like, as an example from the travel analogy, a Schengen visa. If you apply for a Schengen visa from one country, multiple European countries will honor that Schengen visa and allow you entry to those countries. So some kind of an international protocol to go and say, if this is the KYC, AML sanction standards that is acceptable across multiple countries in the world, a customer who has cleared that should be a bona fide, valid, credible customer in any of these countries, which makes you a global financial citizen. That's the point number one that I think can really progress towards regulatory protocol. Second thing is around the tech stack and rails itself. So like while SWIFT is there as a payment rail, like the airport analogy, you have the next level of consumer payment legs on it which are independent. In India, we've got UPI. In Mexico, you've got PIX. You've got different payment rails in different parts of the world. The second area of interregulatory protocol could be around adopting one single payment standard, like the UPI International as an example, to go and make the payments, the consumer-facing payments rail itself common. To be able to actually make it a reality that today if you want to send $10 as a birthday gift to a nephew in San Francisco, you should be able to do that as easily as you can send 500 rupees to your nephew in Bangalore from Bombay. In order, for us, again, this is one of the other things that we've built. When you do a revenue-to-revenue transfer, even if it is overseas, we can make it instantaneous and affordable. Now, again, what is needed is for governments to recognize this and adopt these as common standards where everybody can avail of this. And not just players like us. We can do it in the 38 countries that we're present. But if you make this as a standard, then it can be open for everybody to avail of this, agnostic of which country you're from. Third, the product itself. Now, we all spoke about the challenges. How do we manage to make things affordable? I don't want to give out too much, but our magic sauce, if you will, is the fact that we do our own treasury management, which licenses allow for. If you have an 82 license in India, you can give forex rates. You can do your own treasury management to provide forex rates to customers. So if there is a similar licensing regime everywhere, where you can give, fintechs can give affordable forex rates, then you cut down the entire leg of a fintech offering a pricing to a customer. Then the bank, which is the transaction initiating bank, offering another conversion rate and their own charges. Then settlement charges. Then Swift, he also needs to make money, right? So Swift charges. Then the bank for reverse conversion on the other side. And then finally, the beneficiaries bank also taking their own charges. So if you can create that licensing framework to allow for people, fintechs in that leg, to be able to give their own charges by doing their own treasury management and hedging, that will really optimize for the affordability, as well as the timing also goes hand in hand. Because effectively, if you're eliminating these chains or making them more instantaneous, the recipient can actually get the money near real time, which is what we make possible. And last but not the least, I want to talk about a topic that we don't often talk about, which is transparency. How many of you really, till I spoke about this, that the 5 legs that your money moves through, how many of you knew how your money travels when you send money abroad? 1 person, 2 people. I mean, in a room, how many people have you got here? 800,000 people, I don't know how many. There are 2 people who knew. That's how much of a black box it is today. And for the ticket size of transactions that he's talking about, in education, it's $25,000 to $70,000 depending on where you're going. People literally have their heart in their mouth because they don't know how long it's going to take. They don't know whether it's going to reach the intended recipient. They don't know how long it's going to take. They don't know how much money is going to reach at the end of it, how much is going to get deducted in the entire process across charges. So the other thing that we've done on that product innovation on our journey is make the app consumer journey as transparent, where you can track the flow of your money just like you can track food delivery today on a food delivery app. So to actually debunk and open up the black box, to be able to see under the hood of how your money is traveling, is the other thing that I think should be driven by innovators who are in this room, as well as regulators who go and put that forward. That will take away the entire fear around the engaging in a cross-border transaction and make it seamless and easy, and actually go towards that G20 vision we're all referring to of having one single financial world and a customer having one single global financial identity.
And if I can just add, I think Paroma made beautiful arguments around it. The DHL kind of tracker to track where your money is moving actually exists today. And it is available across 200 countries. We call it Global Payment Initiative that we've done, GPI, that provides that facility. So that tracking is available. And on a lighter note, we don't really run after money because we are a cooperative. So that's one point that I wanted to make.
Just to ask you one more question, and taking off from what Paroma said, and it requires a lot of inter-regulator cooperation. is you have CBDC, so we have the e-rupee. Bahamas, interestingly, has CBDC called Sand. What is the potential, and is it really the game changer where CBDCs of various countries or major countries are interlinked? And I know you all ran an interlinking project. So do you think that's going to be the game changer in terms of solving this problem statement?
So it is not for us to decide whether it will be a game changer or not a game changer. Our agenda is that when you look at your area of operations, 212 plus countries and territories, what happens when you have one country that is wanting to do digital currency and another country where you want to send money that is on a fiat currency, right? How can they exchange information of value? So we wanted to make sure that we are ready. So we did a pilot with 38 countries and their regulators. We did run about 5,000 transactions, and we feel very confident that we are able to interoperate. So whenever the world ecosystem is ready, we are able to interoperate digital currencies. So that's the perspective I can add, Gautam, to that point.
Thanks, Kiran. And lastly, Karen, we've heard a lot of solutions. So we started with problems, some rays of hope and sunshine. So specifically to your area, how do you think any of this innovation where it makes, moving money, assets across borders easier, how will that really benefit the segment that you focus on?
Well, I think, back to the cat reference, just really catching on. I'm not a cat person, but yes, catching on. For low-income women, they are looking for convenience, they're looking for that affordability, and they are time poor. So if you can address those three things with any sort of solution, they will be welcome. You do need to understand their needs, their journey, where they are, how to engage with them directly, what kind of digital financial capability they have. That's essential. Is there a consumer protection framework in place? All of these things do have to be taken into account. If you can do that, I think it really opens up a lot of opportunity and further engages the nearly 1 billion women around the world who are and underserved currently.
Thanks, Karen. So, do we have time? I just want to ask the organizer for audience questions. Oh. Yeah, the timer is looking very angry. It's going from green to red.
You can take these offline if you want this time.
Thank you so much for such an informative session. Really, thank you so much. Let's have a bigger round of applause for them, please.